This is really going to help you with your adulting project for this unit. So we're going to talk about stocks, bonds, 401k, cash, portfolios, asset allocation, all that jazz. So we're going to watch this really quick, and then we're going to talk about it. But first, a commercial. Excuse me? Robinhood. There's an app. Do it on there. Okay, I need you to pay attention because there's a lot of vocab that goes into this. There's a lot of vocab that goes into this. Israel, I'm getting that set up, baby. What's a 401k?
It's a retirement plan.
It is a retirement plan. Okay. You are not guaranteed a retirement plan for every job that you apply for. Okay? You're tripping. Okay. Demand a refund. Tired of these sparkles. Okay, what did you learn? Don't say nothing. Okay, first, talk to me about what's this whole large cap, mid cap, etc.
Big companies, medium companies, and small companies.
Okay. So with large cap, how's the risk factor? So how risky is it? Not that risky. This is like the other day I invested in Amazon. I put stock in Amazon. Immediately in like 2 weeks, I got like 75 bucks just cause, right? Because like Amazon's huge. Everybody buys from Amazon, right? So they're a big company, I get money back, right? But you got to kind of pick the right large capital because for instance, you invested in Tesla a couple weeks ago, a Tesla blew up in somebody's garage, like caught on fire, burned their house down, right? Tesla immediately dropped. I mean, a ton. And so then that would be not so great. Does that make sense? So you got to be wise about what you're investing in.
Fluctuate so much as to like you ever make money from it.
Well, you're buying, normally like stock is going to be very, very small. You're going to have a very small share. Like I have a 0.0002 share of Amazon. Like I don't get that much, right? I just bought in at the right time because like it was close to the time where they paid out their dividends, right? But if I went in on, Coca-Cola, I'm not going to make any, like I can't get a whole share. I will get 0.00001 because there's so many people who are invested in it. So you got to look at how many people are invested in it, how big the company is. And so the payouts may not be as big. Cool. All right. Let's talk about what is a bond? Again, money you give to the government. Okay. They borrow money from you, right? It's what old people used to do. Like when I was born, my grandparents decided to go, buy bonds from the government, right? And you let those bonds sit and they accrue interest. Well, that's how I paid for like my first semester of college was those bonds that I got when I was born, right? Nowadays, they don't do as well because we're like what, 3 trillion in debt, right? So not as great of an interest rate then. Cool. All right. So hopefully that helped a little bit. So what should you remember about investing? What did you remember about investing? Say again. It is risky, okay? But is there high reward? Potentially. Okay, so it's a little risky. And you've got to figure out, are you a big risk taker or are you a little risk taker? I very much am not a big risk taker. I'm going to do the thing that gets me a little bit of money, but not necessarily is going to cost me a lot in the end. Okay, so you've got to figure out how big of a risk taker you are. Okay. All right. What are the 3 types of investment mentioned in the video? We already talked about bonds. What else was there in the video? Cash. Talked about stocks. Okay. If you were planning for your retirement, which type of investment would you choose and why? Go ahead. 401k. There's also something called a Roth IRA. And we're going to talk about the difference a little bit later. You know, you never really think about your retirement, but if you do it when you're younger, you make more money. Okay. I don't want to work after 65, or I want to be able to have the option to not have to work. Like if I want to go work, great, but I don't want to have to work. So I want my retirement to be good so that I can pick and choose when I want to work. Yeah. If I have to work when I'm 65, now I'm still living like paycheck to paycheck, that's a problem. Yeah, medical bills get more expensive when you're 65, right? Yeah, because you're older. Yes. Okay, cool. All right, let's go ahead and look at the next part. What are the 3 main types of investment? So we have stocks. We're gonna kind of group these together. We're gonna do bonds and mutual funds, and then property. Which type of investment traditionally offers the greatest return and the greatest risk? Not property, stocks. I mean, again, I didn't do any work. I threw in a little bit of money into Amazon, right? So what is a stock? A share of a company. Okay, so it's kind of like you're getting investors to buy into your company. Yeah. Now, I will say it's a little weird when they send you like the meeting minutes for the company. They're like, hey, we talked about this. And you're like, I have no idea what that is, but that's cool. But they have to send it out because you're part of a share owner, right? Okay, so why stocks? If you're starting a business but do not have the capital or money you need to purchase the basics to start, you can sell part ownership of the company to others to get the money you need to begin. As a company grows, the value of the stock increases. When a company offers shares of ownership, it's called a publicly traded company. A company can go public at any time, especially if they need the capital to expand, improve, or even replace old equipment. A common stock gives you part ownership, without the liability of the debts of the company, though your stock value may go down if the debts are high. Okay, so here's the problem. Let's say you invest in a really new business and it doesn't go well. That really screws you over in the long run, right? Okay, so it can be good, it can be really bad. You have to pick wisely. You want to think about like what's trending. Do y'all remember when Bitcoin came out? Okay, is Bitcoin still around? It's not talked about that much, right? Are people still investing in it? Maybe. Are they doing it quite as much? Not necessarily. So then Bitcoin starts dropping down, right? But all these people were like, I'm making millions of dollars off of Bitcoin, right? And then nobody said a word about it recently, right? Okay, so you have to think about what's trending, but what's going to sustain over a long period of time. Okay. It's almost like looking in a crystal ball because you don't know. Okay. Your friend's business just went public and you invested $60,000. The investment from all partners was $320,000. What percent of the company do you own now? And do you have a majority? Okay. So what you're going to do here is you're going to take 60,000 and we're finding the percent that you own. So 60,000 divided by 320,000 and we're going to multiply that by 100. So how much of this company do you own? You're going to take 60,000 and divide it by 320,000. Multiply it by 100. What do you get? Okay, is that majority? No. Okay, majority would be like 50% or more, right? Okay, so no, you don't own the majority of it. You got a big chunk, but you don't own majority. How can you find the cost per share? The stock prices are published every day. You can also track them online. The New York Stock Exchange, NYSE, and the National Association of Security Dealers, the NASDAQ, are two of the largest stock markets. You've probably seen them mentioned on the news. The market where the buying and selling takes place, but you can do the transactions through an investment broker or even on your own online. So actually, my little brother does this. So like I can't use him, but I could call him and invest. But if you're family, you can't invest with your family. It gets a little tricky. Because he does a really good job of like forecasting what's going to happen in the market. So if he's telling me what to buy, that's illegal. That's like insider trading. Does that make sense? Okay. No. No. Okay, so that could get you in trouble. So we don't talk about it, right? Okay. But do you see these little symbols? These used to be posted at the bottom of the news in the morning. Now since everything's electronic, now you can just like pull them up online. But you used to have to like sit in front of the TV for a while to like watch for your stock. So these are the little ticker symbols. So each company has like almost like an abbreviation. And then here's your share trades, like how many people are invested in that. This is the price per traded. This is if it went down or if it went up. And then this is how much it changed from the previous day. Okay, so what happened to this one? It went down 1.35. Okay, so they lost money that day. Now, the market ebbs and flows. It's not going to go constantly up. But like last month, it drops like there was like one of my shares that went like down $15. This month, it went up 35. So like it kind of evened out. I'm still positive, right? But you have to be patient with the market. Just because it dropped drastically doesn't mean it doesn't come back up. Does that make sense? Now during COVID, whole another story. Like that was all chaos. Everybody thought they were losing everything. It was a whole deal. Okay. When people start pulling out their money, that's a problem. There's less money being invested into that. Yeah. Okay. Okay. So using the ticker for MSFT at the right, did the value of the stock increase or decrease? And what was the total change in value for all shares traded? We just talked about this. It decreased by 1.35. Okay. Andrea, Dinah? Yep, Dina. I don't know. And Lindsay invested in a partnership with a ratio of 7-9-14, respectfully. 10 years later, the partnership was worth $1,800,000. Andrea decided to sell her shares. What should she expect the value of her sales of shares to be? So, looking at her ratio, she has 7 because she's the first listed. Everybody with me? Okay, so we got 7 out of how many total shares are there? So what's 7 plus 9 plus 14?
30.
Okay, so 7 out of 30. And we're going to multiply that by the total amount. Tell me how much she expects the value of her sale of shares to be. Okay. That's a lot of money. Yeah. Like she just sold that. She just got that $420,000 back. Now we don't know how much she invested initially. Okay. So that's a big number. All right. So now that you've bought stock, how do you make money? So as company grows, their stock market, the stock may increase, though they can also decrease over time. The stock market is volatile. All right, so let's say everybody likes Netflix, right? Yes and no. Okay. I'm a little unhappy with the whole like it was $6 and now it's like 20 something. I don't pay for it though, so that's okay. If you invested $1,000 in Netflix stocks 10 years ago, what would it be worth now? Was the increase steady over time? Okay, so here is actually what you see. Like, if you download the app Robinhood, you can actually see this. Okay, like every single day they give you the little chart. Okay, so this is what happened. Did it increase over time? Yeah, it increased over time, but it also dropped a little bit in the middle, right? But what you want to look at is kind of like start to finish. So did this increase? Yes. Does that make sense? Okay, again, it ebbs and flows. Sometimes it's great, sometimes it's bad. Okay, so if our annual return, if we have an annual return, oh, here it is. It's probably a little tiny on your paper. It's 39.06%. And that came off of the graph. They tell you how much it is when you like register for that stock. Okay. So the annual return is 39.06%. And so now we're going to use our formula. And you've seen this one before. So how much did we invest? 1,000. And we said 1 plus 0.3, come back, 3906. And we invested in it 10 years. Okay. Put that into your calculator and tell me what you get. What caused the change in growth? What caused the change in growth? Think about it. Netflix came out. What did everybody do? They signed up, right? Okay. So the number of subscribers. I can tell you what happened from here to here. What'd they do? They increased their prices. I ain't paying for that. I'm just gonna get such and such as Netflix. I'm a little salty. It's okay. I just canceled my Disney Prime account too. Or Disney Plus. It's fine. It's not fine. I don't know what I'd do with my life now. It's fine. Okay, so there are different types of stocks. And we talked about these in the videos, but let's kind of like go through them again. Okay. Right, bear with me. I know this is a lot of vocab. There's large cap, which is big name, Fortune 500 companies such as Apple. Okay. There's mid cap, usually large companies, but smaller than large. Less known, but still stable, such as Morningstar. I don't know what Morningstar is actually. Anybody help me out? Yeah. I think it might be a medical company, but I might be making that up. I don't know. Google it. She's got me. Oh, didn't know. And small cap, which is a small company, they only have a short history in the market. They're the most volatile. So like DocGo, again, never used that before. All right, safest stocks are always going to be your large cap stocks. They have a history in the market and are reliable companies. Stocks can also split, which means that you bought one, but now you own two. The price will drop when this happens, but when the value increases, you own double now. Okay, so it sucks initially, but then it's good later on when they make money. Okay, so Caitlin owns 140 shares of stock that sells for $39 a share before the 342 split is announced. After the split, how many shares of stock will Caitlin own, and what will they be worth? What would a 2-for-3 split mean? Okay, you ready? This is a little bit of math. Okay, it'll be fine. Okay, a 2-for-3 split. That means that you're going to do 2 times your 140 and 3x. So I don't like that. All right, it's cross multiplying. So you're going to do 140 times 3 and 2 times x. So what's 140 times 3? Sounds good. All right, so you're going to get 420, and then you're going to divide by 2. So that's going to give me x is equals to 210. So you have 210 shares on a 2-3 split. Good so far. Okay, well, hang with me. I got you. Then if you're doing a 3-2 split, 3 for 2, okay, what's going to happen is you're going to do 3, 2, 140 x. You're going to cross multiply. Say it again. And then divide by 3. And that's going to give you x equals 93. With me? So you either have 210 shares or you have 93 shares. We ain't done yet. I know. Okay. So the value of the shares, I'm going to write this over here. Value of shares is you're going to take 140 and you're going to multiply it by that 39. Because you got 140 shares times $39 means you've got 5,460. Okay, so that's how much the value of the shares is. If you have 93 shares, then that means that each share is worth $58.71 per share. Exactly. That's how much each share is worth. Everybody good so far? 93. So I took this, the value, and divided it by 93 and got 58. So I did the 3-2 first. Now over here, it's got 210 shares, right? So if I took 5,460, how much would this share be worth? 26 per share. 26 per share. I know that's a lot of math. We'll get a little bit of practice on this. Don't worry. Okay. So even if the stock prices stay the same, you may still be offered dividends. Okay, dividends are great. A part of the profit of a company, a return on your investment. When you sell a stock and have made a profit, this is called capital gain and will need to be claimed on your income taxes. So not only do you get taxed on working, you also get taxed if you make any kind of money that you did not work for. But you didn't. So, yeah, it's okay.
Wait, like, that's actually a good question. It says that you get money for gambling.
You would have to report it. So hold up. You know, that's where they started the whole like 1776 thing, you know. We were upset that they were taxing us so much, and then here we are. So, okay. So annual yield. This is the average amount. I'm sorry, annual. Average annual. Oh, sorry. I'm going to slow down and actually read what I wrote. Annual increase in the value of a stock. So it's how much it's going to increase. And they look at 1 year, 3 years, 5 years, and like a projection. So when you look at each individual stock, you want to look at how well it did in the past couple of years, because that's normally a future indication. Okay. It also tells you when to buy and sell. Okay. Hey, friend. All right. So go ahead and flip or look at this little thing. So annual dividend equals the annual dividend per share divided by the number of shares. Okay. Dividend yield is the annual dividend divided by the current stock price. Okay. So let's try one of these. Verizon Communications Incorporated paid a total annual dividend of $2. Did I just say $2? Okay, $2.32.25 per share for 2017. What you mean? So you would take your amount of money and then you would divide it by the number of shares that you have. You might have like 1 million shares. So you're going to have to round all the way out to that decimal point. Now, in your bank account, when you get that dividend, it's going to be 2.32. Yeah. All right. So the share price closed at $48.64 on October 25th, 2017. What was the dividend yield? So we're going to take 2.3225 and we're going to divide it by the share price, which is 48.64, which is 0.0477, which is 4.77%. Okay, so what did that mean? So what is the annual yield? Go back to that. The average annual increase in the value of a stock. It's how much it went up by. And so it went up by 4.7%, which doesn't seem like a lot, but if you have a bunch of different stocks, that's not bad, right? Again, you did not work. You're coming off of somebody else's money, right? Okay, Jake bought 540 shares of Sound Foundation stock years ago for $44.50 per share. He sold them yesterday for $49.54 per share. What was the capital gains routed to the nearest percent? So we're going to take 49.54 minus 44.50, and we're going to divide it by 44.50. Do you recognize this formula? As old minus, I'm sorry, new minus old. Because it's just percent. Like, that's how you find it. Man. All right, and then we're going to multiply by 100. When we do that, we get 11%. And again, doesn't seem like much. Are we okay?
That's
We ain't done, yo. I know, it's a lot. Yeah, bro. Yeah, bro. Dude, like investing is a lot. It's a lot. But if you do it right, you can make a ton.
Yeah, see, like if I'm not making $500 in the next 2 weeks, nothing going around. If I don't make $500 in the next 2 weeks, I'm in the
Okay, I do want to be clear. With Robinhood, you do have to claim that, like with your taxes, like you have to print out the like thing and like give it to them when you do your taxes. No, you gotta catch me. All right. A profit is when you make money, and loss is when you lose money in an investment. Usually, the purchasing of stocks also involves a fee or a commission. See, everybody trying to get some to the company that you're buying through, whether a person called a stockbroker, that's like my little brother, okay, or a company such as an E-Trade. E-Trade would be Robinhood, okay. Many online companies advertise no commission fees, but there are sometimes other hidden fees that you need to be aware of. Do your homework before starting. So you've got the cost of stock is equal to the number of shares times the cost per share plus the commission fees. Robinhood is like free, but I'm pretty sure that there's like an annual fee that happens. I haven't hit a year by using it. Like I haven't used it for a year, but I think that comes up. Okay. Profit or divided by loss or profit or loss is the number of shares times the cost per share minus the commission fees. So Megan purchases 970 shares of stock at $43 a share on her broker's advice and pays 1.5% broker fee. She sells it when the total value increases to $47,300 1 month later and uses a discount broker who charges $19 per trade. What are her net proceeds after the fees? This is gonna make you mad. Just get ready for it. So you've got the cost of the stock. Okay, so we're using this formula up here. So how many trades do we have? Or I'm sorry, how many shares do we have? Okay. Did you say none?
I was going to say.
Okay. Times the cost per share. How much does each share cost? Okay. Plus the commission fees, right? Okay, so we're going to take that 1.5%, 0.015 times your 970 times your $43. So this is going to be 42335.65. Okay. Now we're trying to figure out the profit. Yep.
What's that dot next to the
0.015. Sorry. I got to go back to the iPad because this thing's not writing right. Now we're going to do our profit. So the way we do our profit is we take the number of shares times the cost per share minus the commission fees. So right here, it told us that she sells it with this value of 47,300. we're going to subtract $19. And that's going to give us 47281. And now to find our net proceeds, we're going to take this and that and subtract. 47281 minus 4235.65. So homegirl would have gotten 4945.35. She made almost $5,000 in a month. Here's the problem. Do you have a bunch of money laying around that you can invest in stuff? If you don't, then you can't make this happen, right? Okay. She also bought 970 shares. So how much money did she invest at the beginning? She bought 970 shares at $43 a share. So go ahead. Say it again. Okay, so she invested $41,000. Okay, I don't have $41,000 laying around, right? Okay, but you could, the more you invest, the better the return is. Okay. Yeah. Yes, she made a profit of $4,945.35. Yeah. You said that she put how much in? Okay, and this is how much those shares were worth at the end. We had the little fees that we had too, right? So we accounted for, this was her initial investment, plus here's her fees, right? So this is how much she has put in total, okay? Then we found how much the profit was. Now remember, homeboy made $19 per trade. So every time that we trade something, he makes $19. Okay? Yeah, normally it just automatically does it for you. Normally it just automatically does it for you. Like I'll do like sell and then it just automatically comes to me.
Ooh.
Yeah. So that's why I like the electronic. But let's say that it does it or it gyps me. I mean, computers mess up sometimes too.
No.
Yes, they do. You gonna be one of those that buys the robots from Elon Musk. You're gonna have iRobot all over again. Have y'all seen that movie? Yeah, so good. All right, Sal bought X shares of stock that sold for $31.50 per share. He paid a 1% commission on the sale. The total cost of his investment, including the broker fee, was $5,726.70. How many shares did he purchase? Okay, so we're gonna do, we got X shares, right? X times $31.50. That's how much he would have put in, right? Plus, we've got this 1% commission times X times 31.50. So this is how much he has invested total. He's paid his broker, plus he invested money. Good? Okay. So that's going to give me 5,000. Dang, man, this thing can't write. 5,726.70. Okay. Now, what we're going to do is we're going to take 3150 times our X plus this stuff. So we're going to simplify this stuff. And we're going to get 0.315x is equal to 5726.70. If we simplify this again, because we don't know how many shares, right? We don't know how many shares. So that's what we're trying to find. So that's going to give us 31.815 815. X equals 572,670. And then we're going to divide by 31.815. And we get X equals 180. Okay, so on this one, we were finding how many shares there is. Are we okay? No, not the no. Not the no. No. It is a lot, which is why people are making a profit off of people who don't know how to do it. Because like I don't pay somebody to work that stuff for me. I don't pay a broker, right? So I get to keep everything that I do, right? Now there is a little bit of a fee. It might be 1%, boo-hoo. But like for the most part, I do it myself. Yeah. Huh? It is a lot. You're using these formulas. That's all you're doing. Cost of the stock. This is a lot like our P plus P times R times T kind of formula. That's kind of what it is. Huh? Look at it right here. You want to do one of those? Okay. So let's pretend you have a wealthy grandma. Okay. Who on your 10th birthday offered to buy you 100 shares of the stock you choose. In this project, we're just working on it today. Okay, so it's not a stressful thing. I just want you to spend some time. You'll track how you would have done this investment depending on which company shares you purchase. Now, grandma would only buy you one company stock, but go ahead and pick 5 publicly owned companies that you could have chosen at the time. So for instance, when were you born? 2000. Okay, so on your 10th birthday, it would be what year?
18. 2018.
17.
Okay, so when you were born, all right, ready? When you were born, if you were born in 2007, you would be how old in 2008? Okay, how old would you be in 2009? 2010? 2011? 2012? 2013? 2014? 2008? 15? 2015? 2016? And then 2017. So, oh my God, Charles. Okay, so you would write when is your birthday? You're going to complete this chart. Okay, there's a video on how to actually do this. Okay, and then you've got this stock tracker. Okay, you're going to want to open this in a different window so that you can actually look at it. Okay, and then follow these instructions. You're going to compare the stocks. You can write a stock report. I'm not going to ask you to write the stock report. You do not have to do that part. You don't have to do that part. Okay. So I want you to do parts 1, 2, and 3. I just want you to spend some time looking at the stocks. Okay. Because a lot of you have never seen them, right? I know I didn't in high school. I was like, I don't know what that is. Okay. So go ahead